Hey everyone, it is Julie here with TipRanks, and today we're taking a look at a couple of Morgan Stanley's top stock picks for 2024. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. As scary as it is, 2024 is fast approaching, and as such we've had some analysts and firms start to pick out some stocks for the year ahead, one of those being Morgan Stanley. So today we're going to take a look at two stocks that they've recently given a buy rating on, and we're going to see how Wall Street weighs in. Just before we get into that, if you're watching this today on Tuesday the 28th, it is the final hours of our Cyber Monday sale, and this is the biggest sale of the year where you can get 45% off your premium research tools. So if you've been wanting to unlock some of these fantastic resources, now is the time to do so. So make sure you head over to the TipRanks website. Now let's get into these two Morgan Stanley picks for 2024. We are kicking things off in the airline industry with Delta Airlines. Their stock trades under the ticker DAL, currently priced at $35.65 per share, and they have seen some big ups and downs this past year. Overall, they are up a few percent, year to date over 9%, but in the last 6 months are actually in the red. They do currently score a 9 out of 10 on the TipRanks Smart Score as well, with some increased insider transactions and very positive news sentiment. Delta Airlines, of course, is known as one of the major players in the airline industry. With their primary hub based in Atlanta, the airline boasts more than 100,000 employees, operates more than 4,000 flights per day worldwide, and can take passengers to upwards of 280 destinations across the Americas, Europe, Asia, Africa, and Australia. Delta has been recognized as the most on-time airline in the North American market and expects to carry more than 200 million total passengers this year. Like all airlines, Delta is sensitive to fuel costs, and that has caused some of the volatility in the stock price this year as oil prices fluctuate around the world. But in their last quarterly earnings report on October 12th, they did still come out with an earnings beat. Despite higher fuel prices and falling consumer sentiment, the company still was able to post earnings per share of $2.03, coming in 8 cents ahead of expectations. And on top of that, they reported revenue of $15.5 billion, which was a company record for Q3 and increased 30% year over year. For the full year, they're expecting adjusted revenue growth of 20%. Morgan Stanley analyst Ravi Shankar recently reiterated their buy rating on the Delta Airlines stock. They noted several positive factors, including their strong brand, premium customer demand, metered growth plans, exposure to corporate and international tailwinds, partial fuel hedge from the refinery, controlled cost, especially with maintenance costs pulled forward, all put Delta Airlines on a path to be over $7 in earnings per share in 2024 and potentially over $10 by 2027. They think that the Delta Airlines stock should be at least doubled, if not tripled, from current levels. And Morgan Stanley is not alone with their outlook on the Delta stock. There are currently 13 analyst ratings, all coming in with unanimous buys. And those 13 buy ratings come with an average price target of over $55 per share, which would be an upside potential of nearly the same 55% upside from current prices. Down below, you can see all of these ratings coming in following that last earnings report in October. Now, our Morgan Stanley analyst is actually our high-end price target with a very bullish outlook of 116%. The rest are all still in the double digits, with our low-end price target still being above 20% here with Susquehanna. Our second Morgan Stanley stock pick is Keysight Technologies. Their stock trades under the ticker KEYS, currently priced at $137 per share. Now, they have been moving downwards this past year, down 20% in the last year, 15% in the last 6 months, but finally a bit in the green in these last 3 months. And that upward trend there has got them to score a 10 out of 10 on the TipRanks Smart Score with positive crowd wisdom and increased hedge fund activity. Keysight Technologies is a tech firm that provides the tools and instruments behind our technologies. Keysight is an important designer and manufacturer of electronic test and measurement equipment and the software that controls it. The company's product lines include most of the instruments that electronic assembly lines and research labs are likely to need. Their equipment is used in applications across a variety of industries, including communications, automotive, aerospace, healthcare, semiconductor, and more. Basically, any industry that needs digital apps, network connections, or electronic devices will need testing equipment, and Keysight is there to provide. Of course, as you saw, Keysight stock has been falling this year. That is due to several earnings reports where the company's future guidance underwhelmed investors. But in this last quarterly report, not only did they come out with an earnings beat, but also some positive commentary from management. For their fourth quarter, Keysight did report earnings per share of $1.99. Now that did decline year over year, but did beat analysts' expectations. On top of that, revenue came in at $1.31 billion. Their president and CEO commented that in what remains a challenging macro environment, our strategic customer engagement is high, and we're continuing to capitalize on opportunities across a broad and diverse set of end markets, positioning us well for an eventual recovery. Morgan Stanley analyst Meta Marshall weighed in on the Keysight stock following this quarterly report. They said they were encouraged on the Q4 results by the sequential pickup in orders across both business segments and commentary that there was sequential stability in wireless orders and incremental strength in demand for network and data center applications. They said while ESI inclusion is to be more complicated than thought and EISG cuts slightly more than expected, we still think this represents an attractive entry point, and this should be given the last cut given the diversity of growth drivers, keeping it our top pick. We do have a couple mixed opinions on the Keysight stock. It overall comes in as a moderate buy with 7 buy ratings, 1 hold, and 1 sell. And those 9 analyst ratings come in with an average price target of $155. That would be an upside potential of 12.8% from current prices. Down below, we can see those recent ratings. On the low end, we do have our hold and sell rating, both with a slight downside of about a couple percent, and some high-end price targets, one from Wells Fargo with an upside of 27%, Morgan Stanley coming in with a price target of $165 and an upside of over 20%. So there we have 2 stocks that analysts at Morgan Stanley are looking at for 2024. Let me know your thoughts on these 2 companies and what other stocks have you excited for the year ahead. I always appreciate hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at and providing some insight and entertainment. So please make sure you're always sticking to your own investment plan. Thank you guys so much for watching. I hope you have a wonderful day, and I'll see you back here next time.